Hey there all, Chris Parry again from EQUITY.GURU with today's 3-minute hit. Today, I'm going to talk about a company that you may not know exists, but you should, because it's a recent union of about 150 different car companies to become one company. I'm kind of taking the piss a little bit on 150, but a lot. Let's see. Let's say you've put together Fiat, Chrysler, Dodge, Ram, Jeep, Alfa Romeo, Lancia, and Maserati and called it a car company. That'd be interesting. But let's say you also added Peugeot, Citroën, DS Automobiles, Opel, and Vauxhall to that mix. So now you've got 1, 2, 3, 4, 5, 6, 7, 8, like a dozen different car companies squished all together. At this point, it doesn't make any sense to call them Fiat, Chrysler, or Peugeot, or Maserati. You've got to make a new brand. So they've made a new brand, and it's called Stellantis. What's the thinking behind Stellantis? I don't know. I think maybe the ticker symbol might give away something. It's STLA. Now, Tesla is TSLA. Tesla, $650 billion market cap, even after having its share price shredded. Stellantis, $50 billion market cap. $50 billion market cap compared to 650. You've got Tesla here, and you've got everything from Maserati to Vauxhall to Opel to Fiat, Peugeot. It's a lump down here. Now, so why is one worth 50 billion and one's worth 650 billion? Well, Tesla, this makes some money. The revenue's there. It's $81 billion in revenue in the last quarter. That's not bad. It's pretty good. Stellantis, 180 billion euros in revenue in the last quarter. Better margins. Sales are up 41% in the global electric vehicle space. In essence, Stellantis is starting to really rev its engine, no pun intended, because EVs don't rev. But its free cash flow is up. Its market share is up. In Europe, it's dominant. In the US, it's growing. Tesla had first mover advantage, it's great. But also Tesla, it's not so aspirational these days. There's a lot less people who are Elon Musk fans now that he's playing footsies with Nazis and ruining Twitter. And, you might still want to go out and buy a Tesla, but you ain't seen what's coming from Europe right now. Now, some big boy baller moves are happening as Tesla sees Stellantis coming up in the rear mirror. They've also got Ford to deal with, because Ford's now making a big push on their EV side. If you watch the Super Bowl, every single car commercial, which means almost every commercial, was about big trucks that are electric going into the mountains and driving through rivers. Clearly, the car companies have all got their mindset on the EV space. Now, Stellantis has a bit of a head start because they already have EV vehicles. They've been making them for a long time. Problem is that they weren't so great. Now they're getting better, and they're starting to push in on Tesla, which frankly hasn't put a new model out in a long time and doesn't really look like it's going to drop one anytime soon. So, if Tesla's up here, Stellantis is here, and Stellantis is making as much profit, but at 3 times more revenue, you've got to think this is a good investment. Now, what else is Stellantis doing that's going to shake Tesla's tree? Well, just in the last few days, you've got Stellantis going out there and making a deal for 30 billion Argentine pesos, the equivalent of $150 million in our cash, for McEwen Copper. McEwen Copper is a project down in Argentina that's, close to production, but not urgently close. What these guys are doing is ensuring that whatever happens with supply in the next 4 or 5 years, that they've got their supply locked down. Now, Rio Tinto has also invested a bunch of money to get 15% of McEwen Copper. Stellantis overpaid for mine. Like, they paid a premium to lock in 15%. Rob McEwen owns about 13-14% himself. McEwen Mining, his company, owns 51%. So this is a big deal in the Canadian resource space. McEwen's been around for a while. He makes money. He does good things. He progresses mines. And Stellantis has come along and said, let's lock up some copper supply for the next 10 years. Here's a bunch of money. We've got plenty more where that came from. Copper is sorted. Now what's next? Nickel, lithium, Iron, like, I don't know, rare earths, they're all coming on too. So now you've got a situation where you've got an opportunity to buy Stellantis stock if you want to make that long-term EV play. But if you want to get into the broad EV market, well, here's the evidence that resources are about to blow up. Tesla did a deal just last week for a similar sort of outlook. McEwen's doing a deal now. The amounts of money being thrown about for core ingredient metals, not finished batteries, not cathodes, not athodes, not, the lithium itself, the rare earths themselves, the copper, the nickel, all of this stuff is in play. It won't be enough going forward for a car company to say, oh, we need some lithium this month. Well, just go to the LME and get it. Nah, man, you're going to have to lock that shit down in advance, which means all the resources, all the resource plays are in play. Now, the guys that are just out there at the beginning stages of exploration, they will get lifted by that rising tide, but not as much as the guys that are at the mid-range to production, right? The guys that are actually doing the work are the ones that are going to get the big investments. McEwen's doing the work. He's got the first big fat lump of cash to lock down his copper. When that mine goes into production, they won't be out there looking for customers to sell their copper to. The copper will be locked down. It is going to go into Stellantis vehicles. It's going to go into cathodes. It's going to go into batteries. It's going to go into whatever the hell they need it for. It will be there for them. They won't have to go to Africa or Australia or China. It will be right where they want it. There or. So what's going to happen going forward? Well, I think in the next 6 months, you're going to see a lot more resource companies, which means a lot more Canadian companies, that are going to be locking down these deals. Every time Tesla locks one down, everyone else is going to have to lock one down too. Oh, Tesla's got its lithium cornered for the next 10 years? Great. Where are we going to get ours now? So this is going to be, for mine, mark it down. This is the day I think resources really turns up in Canada, especially for renewables. Gold, that's fine. I think uranium's going to do great as green energy continues to push in on the uranium space. But I think the EV space, it's not going to be about buying end product vehicles so much. If you want to, there's Stellantis is a good option. Plenty of upside, won't take too much for it to double in value compared to what it would take to double Tesla stock from 600 billion to 1.2 trillion. They've got to sell a lot more cars to get to that place, and that line is not rising. They've already had slowdowns in their Chinese factories multiple times. They're not doing so well in Asia. Europe doesn't particularly like Elon. US or bust is really Tesla's go. And I don't think that they're going to really pump out any new vehicles anytime soon to shake things up. So the other car manufacturers, every time they put out new vehicles, big marketing campaigns, lots of dealer showrooms, which Tesla doesn't have, lots of opportunities there to get wheels on showroom floors while Tesla is struggling to fill the demand. I think this is going to be a really interesting year going forward for Canadian resource companies that are involved in the EV space. Book it. In the next couple of months, you're going to see deal after deal after deal for any company that could realistically expect to get to production between 2025 and 2028. Now, that's not a lot of companies compared to the amount that are actually out there drilling, but companies that don't drill will be out of the equation. If you've got a small resource company, if you've gone out there and flown a helicopter over some land and taken some pictures, it's going to be important for you to start drilling now, which means you're going to be raising money already. There's going to be a lot of financing going on. There's going to be a lot of hustle and bustle. A lot of people looking to do that business development of bringing in the outside companies that they would one day be selling to as inside investors and directors at the table. I think this is going to be a magical time for Canadian resource investors. Not all, but the ones that are serious, the ones that are actually out there doing drilling, doing the work, those guys are going to be on point soon. Get your dollars together. Start figuring out how to read a 43101. Start figuring out who's real and who isn't. Start putting together your watch list because it's time for resources to get real.